but the monthly chart on IBM is extremely weak, and I noticed that the stock looks like it's going to be dropping sharply in after hours or in tomorrow's trading and things like that. So I just want to reiterate that even though you see we have a daily chart that had an upside divergence on it, this is just an example, just one example about what it means when you get in too big of a hurry to try to take advantage of things, thinking it's going to last longer than it's actually designed to last. See, on IBM's case, as an example, here was, for instance, this last technical bottom, and then related to this one that just occurred, but the technical bottom that occurred back in late August was lower than the one that we just had. So therefore we have an upside divergence because the price bottoms were lower and the indicator bottoms were much higher. So it's not above the signal line or anything like that. So an upside divergence means that if, like I keep saying, the lower time frames, below the daily in this case, would be real-time charts, turn in the direction of the divergence, then the price will move up. And that's exactly what it did. However, that event, much like the gold stocks and the gold index and things like that, that event in and of itself does not mean that there's going to be this long protracted move to the upside. However, when the price was down here at 178 or 179 and then they just move up to 187 or whatever it is, and even sitting there today, that you could make money on that move even though it's against the trend. But if you begin your analysis at the top, then you'll never be confused about the ultimate direction that the stock should be taking and the path of least resistance. Path of least resistance was and is still down. There has not been any change in the direction or the fact that there's this strong downside divergence. None of that has changed anytime since the price had this peak over here, which was back in March of this year. It has had a downside divergence. Ever since then, it's been well below the signal line and breaking down significantly. So if we were to take the normal analysis that we do and compare that, which would be straight across, not there, but here, and then that technical pattern that was originally there, it would have been an angle of divergence that would have been like this. So when the price was up here at 215, it should have been no higher than 195 or 196 or something like that. It should have been $20 below that. And if we continue with that same thinking, the same exact type of analysis, comparing the indicator tops on the highest time frame to the current level of the MACD on that same time frame, we have a picture that looks like this. Correct? Correct me if I'm wrong. See? Now, does that look like the stock is in an uptrend or should be in an uptrend? No. Does it mean that there cannot be interruptions to the downtrend? So therefore, the technical picture that exists on the monthly chart still shows the price ought to be down around 165 or thereabouts, see? And not 187 where it closed today, around that area, see? So tomorrow we're going to see the price of the stock drop again, and then this just gives you some insight into how long you should expect something to last against a backdrop of extreme weakness like this.